Look, it feels like a good number to us. We're continuing to grow jobs. If you look what's going on in the manufacturing sector, that's a sector that President Trump cares a lot about. We're at a 17-year low in manufacturing at 2.6% unemployment. We're continuing to drive people back into the labor force. But as you point out, we're still not growing wages in this country. We do believe that tax reform will help us drive real wage growth in the United States, which is something really important to the administration.
We're just not seeing that. Wages up 2.5, unit labor cost earlier in the week. When you talk about wage increases, over what time period? And on top of that, when the president talks about growth going to 4, 5, or 6, is that something you think is in the universe of the possible?
Look, we know that American workers, once this tax bill is passed, they'll start seeing their paychecks change early next year when the withholding tax charts are changed. So they'll see a change in withholding tax. And then as the economy continues to grow and we bring more businesses back to America, we'll create more competition for labor. So we'll continue to see more wage growth over the next cycle, over the continuation of the next 4 or 5 years of this cycle. So we think we are in a prolonged period of wage growth, starting the beginning of next year, which is something we haven't seen for the last 8 or 10 years, and that's really important to us.
Gary, Jim, great to see you. I'm glad you're on our network. It's always great to have you.
Jim, it's great to be with you.
Gary, bonds. They're doing nothing. We got one of the greatest employment numbers ever, and they're doing nothing. Could you please put that in context? Because you know that there were other times in both of our careers where we would just say, oh, man, is this bad news.
Well, Jim, I think people are in a position now where I think they're quite excited about the tax plan, the tax reform that's coming. The stock market is clearly starting to react to the tax plan. They're starting to digest how that's going to react to corporate earnings and how corporates are going to grow and how they're going to put people to work and how they're going to grow wages. And I think they're trying to digest what does that mean for the bond market, what does it mean for debt market, and how our business is going to grow. And we're in a relatively benign period here with the Fed because, as you said, we haven't seen the wage growth, we haven't seen inflation in the system, and people are trying to figure out where is the Fed ultimately going to go with rate policy. And I think people are thinking it's going to be more of the same. Rates may tend higher, but they're going to tend higher in a very slow pace.
Gary, it's David. I wanted to follow up on something you just said. You just said big business will come back to America as a result of the tax cuts / reform. I understand why we might stem the tide of those wanting to leave and then move to a territorial system as well, important there. But why do you think there's going to be any that actually come back?
Well, look, when you look at the competitiveness of America, we're not competitive today. We've got a 35% worldwide rate. When you've got a 20% territorial rate and you're looking to invest capital, the first thing you look at when you're making a capital allocation decision is your after-tax rate of return. We're now going to have an after-tax rate of return that competes with the rest of the world. It's going to make us competitive again. It's not just big business. If you look at the NFIB numbers this week, the optimism in the small businesses and the pass-through business is at all-time record highs as well. So small businesses are hiring as well because they see the growth in the economy.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.